The Bank of Japan just bailed out the global stock market in less than 48 hours after crashing it. In this video, I'm going to explain the Bank of Japan's pivot, why the market is rebounding, and more in a quick rundown. Here is a quick timeline of what happened. On July 31st, the Bank of Japan raised its interest rate to 0.25% for the second time in 17 years. This crashed the stock and crypto market because it unwinded the yen carry trade, which I've explained in the previous video. On August 7th, the Bank of Japan pivoted and said that they're going to maintain the 0.25% interest rate due to market volatility. As a result, the stock market rebounded slightly after Uchida's speech. Here is a transcript from his speech earlier today. Uchida, the Deputy Governor of the Bank of Japan, said, "As for the future conduct of monetary policy, in a nutshell, I believe that the bank needs to maintain monetary easing with the currency policy interest rate for the time being, with developments in financial and capital markets at home and abroad being extremely volatile." This is a pivot from their monetary policy, as they were previously expected to raise interest rates further. Here is a timeline of what happened during his speech. In 332, Uchida said that the policy path will change if the view on risks change, and mentioned that the market's reaction to a single piece of US data is too big. A couple of minutes later, Uchida says that he sees no big change to Japan, and the market moves are extremely volatile. Because of this, he mentioned that the Bank of Japan must maintain its current degree of easing for the time being, and will not raise rates when the market is unstable. After Uchida's speech, the yen dropped over 2% against the US dollar, and Japanese stocks rose sharply. Bitcoin is up about 2.5% from 55,000 to 57,000, and Nasdaq futures are rebounding slightly. Here are some of the global reactions to Bank of Japan's actions. CIB suggests that the Bank of Japan is unlikely to raise rates soon, which impacts the yen. In an FSA, MOF, and BOJ meeting, the new Vice Minister Mimura emphasized the need to consider financial market volatility. The Bank of Singapore mentioned that policymakers are uneasy about the yen's sharp rise, as reflected in Uchida's statements. UBS trader Alex Lim suggests that the Bank of Japan does not want to be blamed for the major market sell-off following its rate hike in July 31st. Lastly, Bloomberg reports that political pressure may have influenced the BOJ's rate hike and the tapering of Japanese government bonds. Uchida's speech earlier today addressed the market sell-off and justified its previous hawkish decision. To summarize, the Bank of Japan indirectly admitted that they screwed up, as their actions are seen as an effort to mitigate a global financial crisis and support asset prices. The pivot aims to stabilize financial markets and prevent further economic turmoil, allowing the previously halted yen carry trade to resume. If you found this video helpful, do give it a like and subscribe to the channel. If you want to learn more about the yen carry trade, I've explained it in my previous video, which is showing on the screen right now. You can watch it if you are interested.